This week's theme on the Retirement Quick Tips podcast is What I'm Reading, Summer 2024 edition. I've curated some of my favorite articles, things I've stumbled upon recently that I think are relevant for your retirement as well. All right, so today I'm talking about a recent post on Dave Ramsey's website, Ramsey Solutions, that talks about, it says, day trading is worse than you think. I wanted to cover this because while I think that a lot of you listening are not day traders, there's been a huge resurgence in more active trading, maybe not necessarily day trading, for some, yes, but more active trading. So between the meme stocks and Bitcoin's popularity, I would say that in the last, basically since COVID, in the last 4 or 5 years, there's been this huge resurgence in people day trading, more actively trading, trying to get rich quick. And that's basically what day trading is. It's another get rich quick scheme. And so, I even see ads on YouTube where someone is like trying to convince you that, oh, this particular trading strategy is some secret and you're going to be rich. But they don't tell you that it's very expensive. The odds are stacked against you in the worst way possible. What I like about this article in Ramsey Solutions is that it kind of covers all of this and explains, what day trading is, but some of the research behind it as well. So what really stuck out to me the most about this article is that it says studies have shown that more than 97% of day traders lose money over time, and less than 1% of day traders are actually profitable. 1%. Okay. That right there tells you, I think I have much better odds in Vegas. And nobody thinks that they're going to be the one to lose. They think that they found some secret solution and that they're going to be profitable. But day trading or really active trading is not really investing at all. I would not even classify it as investing. It's gambling, it's speculation. The article says it's like playing a high stakes poker game. You might win a hand or two here, but chances are you're going to leave the table broke and disappointed. There's some other drawbacks of day trading too that I think that are overlooked when someone is tempted to kind of go down this path. One of them is that you become a prisoner to your computer screen. You're trying to stay up to date on everything that's happened, trends, any little nuance thing that might move the market or move some stock that day. They're trying to get little clues here and there about what's going to happen. So I used to work with an advisor. Earlier in my career, I worked in a larger office with multiple advisors. At one time, there was like 25 advisors in this office I worked at. And so I remember one of the advisors, he was pretty kooky, actually. He's an interesting guy, but he was a very active trader. This was a prison for him. Like he was a free man, but not really, because every single day well, first of all, he couldn't take a vacation. I worked with him for years and I never saw him miss a day of work or take a vacation. He couldn't because he had to be up at 4:30 every day. He had to get in the office at 6 a.m. before the market opened. Now we're on the West Coast, so the market opens much earlier here. And so you have to start your day earlier if you're going to be active and trading when the market is open. And I just thought, man, that is no way to live. He didn't seem too happy about any of it either. Some of the other drawbacks that I think people overlook or don't think about if they're tempted to go down this path is that the reason why people lose is because the day-to-day movements are very difficult to predict. Like you just don't know what direction stocks are going to move. And sometimes you might say, oh, the Fed's going to lower rates today, or this big news thing is coming out and I'm going to get ahead of this and I'm going to trade. And a lot of times the opposite happens of what you would expect to happen. Because again, the markets are unpredictable. The market reactions to that, investor reactions to certain events are never predictable. And you look at what happened with Hamas and Israel, and the reaction to that was really muted. If you look at the stock market reaction to this major world event, it was like nothing happened. Another study found that traders who lose money account for anywhere between 72% to 80% of all day trades being made. So most of the people trading on any given day are actually losing. But the less active investors and quote investors are, more of the buy and hold. And that's the lesson here is that buy and hold, there's not some get rich quick day trading scheme that is going to work that someone pitched to you or you saw an ad for. You need to stick with a time-tested strategy of buying and holding and being invested with the long term in mind. Someone pointed out to me, I forget where I heard this, but it's very true. There are no billionaire day traders, not a one, nobody. But there are plenty of billionaire investors who have made consistent, good decisions over a long period of time and keep the long-term view in focus and aren't trying to get rich quick. The last thing I'll say about day trading is that it is very costly. So not only do you have commissions, transaction fees, that eats into your earnings, but because you're buying and trading so frequently, you pay short-term capital gains on anything that you have a profit on. And that's generally going to be the same as your income tax rate. So you're punished tax-wise, you're punished from a transaction cost perspective as well. I don't understand it. Lots of people have become more active in this area in recent years, and I wish they wouldn't because it's a losing game. You might as well take your money to Vegas or light it on fire in your backyard. All right, that's it for today. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips Podcast.